We're in a very volatile environment. Some of that's a function of kind of where we are right now.
Hi once again, everybody. Welcome back to the Comstock channel. I'm Marlin Bohling with you. Thanks for joining us, and make sure you like these videos, subscribe to the videos by clicking on the bell icon down below, and share these videos with others as well as we continue to grow our audience thanks to your help. Well, today I want to welcome aboard Derrell Peel, an ag economist with Oklahoma State University. We all know Derrell. He's an expert in the cattle industry. And Derrell, good to have you back with us here. I just wondered, since the cattle markets have kind of fallen on hard times in the last few weeks, I wondered if you could give us a little update on what is causing that commotion to the downside. And if you've had a chance to go around and look at cattle around the country here in the last couple of weeks.
Yeah, this latest thing, we're in a very volatile world, broadly speaking, and obviously the cattle market, anytime you're at record levels, you're pretty vulnerable to anything that makes markets nervous. And I think that's really what's going on. The fundamentals haven't changed in the cattle markets. They're still very solid. But the stock market jitters a few weeks ago triggered another, correction in cattle markets, mainly the futures, but it did spill over into cash markets as well. And part of it, I think, is the time of year. We're in the summertime. We've been kind of in a sort of marking time to get through the summer doldrums, if you will. And I think that made it a little bit easier for this market to take a little bit of a hit. So we'll probably spend some time going forward, kind of clawing our way back up out of this. But I think underneath it all, the fundamentals are still very strong. So, I have been able to get out just a little bit and see some different operations. I was actually up in Pennsylvania and New York last week. Got to see some cattle operations in a part of the country that I'm not terribly familiar with.
Interesting. You mentioned that sell-off in the equity markets here about 3 weeks ago, and it was a pretty big collapse. Although, percentage-wise, when you look at the bigger picture, some say, it was just a correction. When that sold off like that, it took the cattle along with it, and they sold off sharply. However, the stock market turned around, and now it's up there at near new highs again, and the cattle market never recovered. What's the deal with that anyway?
Well, it hasn't yet. I think it'll be a slower process for the cattle markets. Again, cattle markets are awfully vulnerable, partly, again, as because we are at record levels. There's been, lots of reasons to be concerned about, obviously tight supplies is really the driving factor here. But we've pushed not only cattle prices, but box beef and retail prices to record levels. There's been lots of concern about demand. It hasn't really been truthed in the market yet. In fact, if you look at box beef prices over the last month or so, we've traded within a $3 range for choice box beef. It's kind of been bouncing around. Again, I think sort of marking time through the heat of the summer. And, we haven't really seen a lot of those fears really realized, but the fears are there. And I think that's what the futures reacted to. And that's what we're going to have to work our way back from here over the coming weeks.
Is there a seasonality to what we're seeing in the cattle market right now?
A little bit of seasonality. We've had a very strong uptrend with this unique supply situation that we're in that's kind of masking some of it. But certainly there is some seasonality. We've seen, again, I think we've kind of seen the summer doldrums, I call them, markets just kind of almost take a pause through the summer, get through the heat of the summer. So we've sort of seen that going forward. I expect to see to some extent some seasonal strength rebuild in probably the box beef markets and also in fed cattle markets. Now, if you go all the way down to the lightweight calves, seasonally, they're supposed to go down to an October or November low, and I'm not sure that's going to happen. We have to wait and see going forward, but I really kind of expect a counter seasonal move on those lightweight feeder cattle as we go forward.
Usually you would look forward to Labor Day demand, right? For some featuring coming up for that last summer holiday, as we usually refer to it. But are we past that already? Have the wholesalers already grabbed what they needed?
I think probably they have. And, we didn't really see that bump kind of mid-August. that you would sort of expect at the box beef level, at the wholesale level. I think it tried to do that, but maybe we had competing forces here that kind of wiped each other out, sort of holding us steady. Yeah, I do think there was probably underlying a little bit of sort of the last grilling holiday demand built in here, and then we'll see how we get through that, and see where we go from there as we move into closer to the fourth quarter.
Well, now that school is open up in most of the country once again for the fall, does that change the buying patterns of the consumers now?
Well, we typically see different demands for different products or different parts of the carcass. So now the one thing that still remains very strong right now is on the ground beef side of the market, if you will. So if you look at the trimmings market coming out of non-fed, beef production, cow slaughter is down, 15 or 16%. And so that's driving extremely tight supplies on that level. We've got 90% trimmings at record levels. And so you've got a very strong ground beef market, and part of that's summer grilling as well. As we go in, and what we've seen is actually some spillover demand for lean beef in the box beef side that shows up really primarily as demand for some of the round products. The leanest part of the carcass typically is the round, and there's a number of those round cuts that have been priced at or below the 90% trimmings level. So we're seeing some arbitrage, if you will, maybe a little more than usual, pulling that lean beef out of the fed beef side of the market into the non-fed beef side. But I say all that to say that as we move into the fall, we typically will see, two things. We'll see a little bit of strength for kind of the roast crock pot kind of season as we get into cooler weather, but we'll also see some increased middle meat demand. Once we get past the heat of summer and get into fall and cooler weather, we'll start seeing a little more restaurant traffic for some of the middle meats. So we'll be looking at the tenderloin and even the ribeye to some extent as we go forward.
You're my go-to guy when it comes to checking on the different category numbers that we have in the nation's cow herd. And we've been watching for years now as they try and rebuild that cattle herd, and it just keeps getting shoved back a year after year after year. Where are we now? Last time I spoke with you, all indications were that we still weren't going to gain much ground by next spring.
Yeah, I don't think we are. There's no real indication that we've started any significant heifer retention, which will be a key part of any herd expansion. In fact, I'm quite sure from the numbers and have been most of the year that, come January 1 inventory numbers, the beef cow herd will be smaller yet again. That's kind of been in the works with the numbers all year. So we'll probably be down I would expect another 0.5 to 1% for the beef cow herd January 1. And the real question, I think, will be what does that beef replacement heifer inventory look like? It's been getting smaller every year for the last 5 or 6 years. It should go up at some point, but I honestly think given the level of heifer slaughter and the data we have on the number of heifers in feedlots through the first half of the year, that any heifer retention going into next year will be limited at best. We might see a small increase in that replacement heifer inventory, but I think what it all means is that probably the best we could hope for in 2025 would be to just stabilize the herd, maybe stop getting smaller. But I think the prospects for any real growth in 2025 are very limited.
So reading between the lines, it seems like no matter what, we're going to have to increase beef imports. Is that right?
Beef imports are going up. Again, that's largely on that sort of ground beef or processing beef side of the market. And we're already seeing, because of that tight supply over there, we're seeing a significant increase. That's where most of that goes. It's not all, but the biggest part of the imports support that processing or ground beef side of the market. So yeah, we would expect to see that. It's kind of a marginal response, if you will. It doesn't change the overall picture, but at the margin, it's the market responding as you would expect to try to moderate some of the impacts that we're seeing because of the tight domestic supply of that processing beef.
So what are conditions like for cattlemen out in the plains? Whether it's pasture cattle or feedlot cattle, from what I understand, are cranking up the furnace again next week.
It's been relatively hot, although, and somewhat above normal, at least here, in the southern plains. But all in all, we've actually had a pretty good year from a forage standpoint. Pasture conditions have been, good to maybe just adequate at times. Hay production, I think, is relatively strong. So, all in all, we've got a pretty good forage situation at this point. Now we're kind of teetering on the edge of some redeveloping drought conditions. Some of that's a function of sort of being in late summer. It typically gets dry this time of the year, but I think there's a lot of lingering concern from what the meteorologists are telling us with La Nina conditions likely redeveloping this fall. I think there's a lot of concern going forward that even though we're in somewhat better shape for the time being and just kind of getting by, that we may not carry a lot of that forward into the fall and certainly into next year the way things look at this point.
So if I understand you correctly, you're you're talking about really not increasing the cattle numbers much, if any, next year yet. So that would seem to suggest that we're probably kind of stuck in this minimal plateau for prices on the cattle market, at least for the foreseeable future. What do you see down the road that could upset that apple cart anyway?
Well, from a supply standpoint, again, we've been getting smaller, so we just have less cattle. That's really what's driving the market at this point. If we do at some point get more aggressive about herd expansion, which will be largely driven by heifer retention, then we're going to really tighten up feeder cattle supplies. And that would put even more price supports in there, more support for higher prices. Although I don't know how aggressive that's going to be, but it's certainly going to be there. At some point in time, we have to save some heifers. Otherwise, we're just going to keep getting smaller and smaller. And I don't think that'll happen. The price levels we see in the marketplace would tell us that there's certainly incentives for us to rebuild this thing at some point in time when we can. And it also hinges on those drought conditions. So the short answer is, I think you're right that we're going to be in this relatively high price environment for cattle. At some point in time, we'll probably push it even a little bit higher to some sort of a peak that certainly won't happen in 2024. It may not even happen in 2025. It could push out past that. And I think the prospects for herd rebuilding are, not a fast process. With the benefit of hindsight, the last herd expansion that we did about 10 years ago was actually remarkably fast. And we're not set up to do that this time. It's going to be a much slower process. So we're probably talking about a, 4 to 6 year process or something like that.
So for cash flow and budgeting purposes moving forward into next year, it seems like you would think we'd be relatively safe to at least use the levels that we're at now when you're doing your calculations for forward pricing. You don't think there's too much fear of having to lower that down the road?
No, I think the general price level, I think you're right. We can, take today's prices. We're actually projecting, somewhat of an additional higher price on average in 2025. Now, the one thing that we started out talking about is the volatility in the market. We're in a very volatile environment. Some of that's a function of kind of where we are right now with lots of global market, macroeconomic jitters, some domestic macroeconomic jitters. And then I think the reality is that this election cycle that we're in adds additional volatility in the market. So, despite how bullish we are in general for prices, it's very, very important for producers to, sort of protect themselves when it comes time to those points in time when you have to make a marketing decision, because anything can happen in the short run. And most of this volatility is relatively short-lived, but if it happens when you're in the process or needing to make those marketing decisions, it can be a pretty severe impact. So you want to protect against that.
Seems like the only outlying thing out there would be maybe on the grain side. If something would happen, maybe the weather conditions would turn sour in South America maybe for the next growing season and cause some sort of a rally in the grain market. That could put pressure on the feeder market, right?
It would add some pressure. I think that's probably a little farther down the road, but obviously we're never very far away from another drought situation that could push feed grain prices higher, feed prices higher. Again, we've talked about our own drought conditions in the U.S. from a forage standpoint as well as from a crop standpoint. There's certainly the threat of redeveloping drought conditions. So all of those things, I think, are part and parcel to why we're not seeing the cattle industry, the beef cattle industry, be very aggressive. Producers just seem to be taking a very cautious approach towards this idea of herd rebuilding, heifer retention, and herd rebuilding. Nobody's really wanting to step out there in a big way, and so we don't see the indications in the data at this point in time that we're pursuing that very aggressively at all.
Well, you mentioned earlier that we are in an election season, and that idea has been floated out there about price controls, and that seemed to really be a thorn in the side of the cattle market here recently because it's so high priced. Realistically, I mean, if something like that was proposed or implemented, how in the world would that work, and how would that impact beef versus pork, do you think?
Well, those kinds of things would certainly cause an impact in the market. I mean, basically, anytime you sort of go down that road of price controls or some sort of limits, you're really preventing the market from functioning as it's intended to function. And so there's a whole host of sort of secondary and unintended effects that I think would accompany that. So, certainly as an economist, I would say that's a place where you want to tread pretty carefully in terms of causing those kind of distortions in the market signals. We rely on markets largely in this country to allocate resources to sort of figure out what we're going to produce in response to the market demands that are out there. And if you don't allow those market signals to actually work, then you can potentially create some really serious unintended consequences that could have a lot of impacts, not only on the industry, but really for everyone.
Wouldn't that artificially upset the entire wholesale and retail supply chain there? Nothing would really be according to logic at that point, right?
It's certainly possible. Again, if you somehow create conditions where supply is interrupted, the supply chain is interrupted at some point, then one of the things that we sort of take for granted in this country most of the time is that we don't run out of product very often. That's one of the big jobs of the market, is to make sure that there's always stuff there. It might be really expensive when things are in tight supply. That's how we ration it to make sure we don't run out, is we price it so that people figure out how to use less of it, or maybe not use it for a little while. And if you disrupt that process, one of the consequences is you could find yourself with noticeable shortages. A number of us are old enough to remember the gas lines of the early 1970s and those kinds of things. And I think that's probably an area that we want to be really cautious about probing into very much.
Well, Derrell, it's only been, 3 or 4 years? And I remember watching people at the supermarket waiting for the meat to come off of the delivery truck, for crying out loud. The meat case was empty. Could go back to that, right?
Yeah, for brief periods of time during the COVID pandemic, we actually had such massive shocks in the entire supply chain in the beef industry, where we didn't actually have a shortage of overall product, but we didn't have the right product in the right place at times, and that showed up as things that we're just not used to seeing in this country, and that's empty shelves for products. So yeah, that's kind of a scary prospect.
Boy, it is. Derrell, I'm so glad you could join us. Thank you for all the insightful discussion today. I always look forward to our talks. Derrell Peel with Oklahoma State University with us here today. And that'll do it for this episode. For producer Brianne Hendrickson, I'm Marlin Bohling. We'll catch you next time on the Comstock channel. Thanks for joining us on our Comstock YouTube channel. Don't forget, you can also find us on Facebook and TikTok as well. Futures trading involves risk. The risk of loss in trading futures and/or options is substantial, and each investor and/or trader must consider whether this is a suitable investment. Past performance is not indicative of future results.